U.S. President Donald Trump says he will now impose a 50% tariff on copper imports. He made the declaration at a cabinet meeting in Washington. Trump also says he will soon announce tariffs on pharmaceutical imports. Take a listen.
We'll be announcing something very soon on pharmaceuticals, and I don't allow it to happen. The people in this room don't allow it to happen. So we're going to be announcing pharmaceuticals, chips.
Copper prices just exploded to record highs. Cars now cost $6,000 more. Homes up by $20,000. And one move started it all: Trump's 50% copper tariff. Within hours, markets panicked, Canada hit back, and a full-blown trade war ignited. Now factories are scrambling, voters are angry, and the global supply chain is cracking. What comes next could hit your wallet and your future. Stay with us. On July 10th, 2025, President Trump stunned markets by signing a Section 232 proclamation imposing a 50% tariff on all imported copper, set to take effect August 1st. He justified it as a national security measure to revitalize U.S. industry despite domestic mining output already covering only about 1.1 million tons in 2024. A slight drop from prior years. U.S. copper imports in 2024 reached over 810,000 tons, representing roughly 41% of total refined copper consumption, with most coming from Canada, Chile, and Peru. By targeting these imports, the tariff slams a luxury-level tax on nearly half the nation's copper supply. The market reaction was immediate. COMEX copper futures surged 40% in 2025, hitting fresh records after the announcement. Analysts from Bloomberg called it a jolt to U.S. manufacturers, warning that this shock could spur demand destruction if domestic supply struggles to fill the gap. Trump's hardline stance clearly signals, bring copper production home. But critics argue the tariff risks triggering supply shortages, steep price hikes, and deep disruption across supply chains, all before American mines can ramp up. Copper markets went into overdrive as soon as Trump made his announcement. COMEX copper futures surged over 12%, reaching a record $12,330 per metric ton, the sharpest one-day gain since 1968. Meanwhile, the U.S. London price gap exploded to at least $2,920 per ton, creating a massive arbitrage spread. Traders rushed to lock in profits. Major firms like Trafigura and Glencore are poised to bank $300 million in revenue from the price disconnect. U.S. port warehouses, especially New Orleans, reported a 40% surge in inbound copper, as importers struggled to beat the August 1st deadline. That cascade drained London Metal Exchange stocks, intensifying global supply tensions. Even the Shanghai exchange cooled, signaling shifting global flows. And in comments to Reuters, Goldman Sachs analysts warned this spike may be a negotiation strategy, not a structural market shift. But for now, prices are soaring, traders are cashing in, and manufacturers are bracing for the fallout. From factories to front doors, everyone feels the copper tariff sting. EV makers like Ford, GM, and Toyota warn that copper now makes up 5 to 9% of a car's production cost, up from around 5% before. The hit per vehicle could be between $1,700 and $5,700, pushing prices higher for buyers. Over 80 kilograms of copper used in electric vehicles adds $90 or more per car, according to UBS and JP Morgan studies. Housing isn't spared either. CoreLogic says tariffs could add 4 to 6%, or $17,000 plus to construction costs for a new single-family home. A U.S. bank strategist notes that rising material prices combined with higher mortgage rates are already squeezing affordability. And remember, copper is critical for power lines and data centers too, so expect higher electricity and tech costs. Bottom line, your car, your house, and your monthly bills are all taking a hit. And it's just the beginning. Canada didn't wait to fight back. Just hours after Trump's copper tariff was signed, Prime Minister Mark Carney called it economic aggression and confirmed a multi-phase retaliation plan. That includes new duties on U.S. steel, aluminum, and auto parts, aiming squarely at key American exports. But Canada's real move? Rerouting billions quietly. Major miners like Teck Resources have already shifted copper shipments from U.S. ports to South Korean smelters, then on to the Shanghai Futures Exchange, cutting American buyers out of the loop. According to Statistics Canada, March 2025 saw a 24.8% rise in exports to non-U.S. markets, while U.S. shipments dropped 6.6%, the sharpest shift in 9 years. Inside Parliament, Ottawa is also weighing waiving export permit fees to boost the shift eastward even faster. Unlike Trump's loud declaration, Canada's response is calm, calculated, and already disrupting America's supply chain. This is trade retaliation done the Canadian way, quiet, bold, and deeply effective. Canada didn't just respond quietly, they've assembled a massive counterpunch. On March 4, 2025, Prime Minister Justin Trudeau announced that Canada will levy 25% tariffs on 155 billion Canadian dollars worth of U.S. goods, starting with 30 billion Canadian dollars immediately and rolling out the rest over the next 21 days, including a 125 billion Canadian dollar tranche in late March if the U.S. doesn't back off. This sweeping list targets everyday items like vehicles, appliances, fruits, steel, and dairy products, goods essential to American households and industries. Trudeau said these measures will remain until U.S. tariffs are fully removed. Meanwhile, Canada has launched a tariff remission program so Canadian businesses can apply for relief if they can't find alternate suppliers. It's a strategic yet calculated blow, large enough to pressure U.S. policymakers, but designed to protect Canadian industry. And with Canada's financial targets locked in, the pressure clock is ticking for the U.S. to act or face sweeping economic retaliation. U.S. manufacturers are sounding the alarm. Input costs are rising fast and margins are shrinking. A Bloomberg/Investopedia report warns this 50% copper tariff risks triggering demand destruction and squeezing producers unable to switch suppliers quickly. Goldman Sachs estimates U.S. copper imports could surge by 50 to 100% before August, pushing stockpiles high, then plunge steeply post-tariff. That wild inventory swing means volatile markets, and UBS predicts U.S. import volumes will drop sharply after August 1st, worsening shortages. ING's Iwa Manthi states this move risks higher inflation, raising costs for U.S. manufacturers without a domestic alternative available. J.P. Morgan warns core inflation could stay around 3.8% into 2025, clashing with growth targets. Meanwhile, J.P. Morgan Global Research says tariff-driven growth cuts may increase recession odds. Bottom line, J.P. Morgan analysts say combined impacts could shave up to 0.5% off Q4 GDP, with risks of slowed factory output and weaker consumer spending. U.S. auto, tech, and energy firms are already bracing for mixed earnings and possible job freezes as costs bite. The message is clear: America's economic engine is sputtering as this policy plays out. As U.S. copper gets taxed, Asia pounces. China and South Korea are now absorbing metal that once flowed to the U.S.-Chinese traders, report a big surge in offers for late July deliveries, signaling a rush to secure copper before the August 1st deadline. Meanwhile, copper-linked stocks across Asia slipped. London and Shanghai prices edged lower, even as U.S. futures jumped almost 13% to nearly $5.90 a pound, showing a sharp shift in supply chains. In South Korea, this reshuffling hit home. Exports to the U.S. and China fell 8.1% and 8.4% in May, according to government data. Now, Asia is stepping into the breach, buying up copper that North America rejects. The global copper market is being redrawn, and it's Asia that's winning the first moves. This isn't just economics, it's political theater with real consequences. Trump argues the copper tariff is a bold protection move to secure U.S. manufacturing and national security. However, critics warn it's economic suicide, with Rupert Hugerwerf from FT saying this tariff yields mixed results, damaging to vital sectors like EVs and infrastructure. A Reuters report highlights growing concerns in the auto industry. Analysts say soaring copper prices could cripple vehicle production and spark job freezes. An Ipsos poll cited in early July found 73% of Americans predicted price surges under Trump's tariffs, while 57% opposed them, warning of consumer backlash. Democratic lawmakers are pushing a bipartisan Trade Review Act aiming to limit presidential tariff powers. Meanwhile, investors and economists warn the move may trigger a wave of stagflation, with T.S. Lombard warning these aren't low-grade shocks, but growing threats. So here's the gamble. Is this tough stance worth the pain of higher inflation, disrupted supply chains, and potential job losses? Or is it a political gesture that could cost Trump dearly, especially in swing state families already reeling from rising prices? Trump's copper tariff shook markets, raised prices, and triggered global fallout. Fast. Subscribe now for real-time updates on trade wars, economic shifts, and political consequences.